This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Well, the market had another bull trap rally. They're feeding the bears today. And I have such conviction that this is a false rally. Amazon turned the market to the positive. You would think that it would take more than mixed results because the Amazon results were mixed. Part of the reason they had the good part of their results were that they invested in Rivian and they reported the profit as of the end of last year. Now, since that time, the value of Rivian has gone down 40%. Okay. They got $11 billion credit for what they put into Rivian, and 40% of that is now gone. So the results are looking very puffed up. And remember, when you first start making electric cars, you're going to lose money at first, okay? It ran up because the stock price went wild. And those days are over. And I would not be predicting that Rivian is going to be a positive addition to Tesla, not to Tesla, I talk about Tesla so much, it's in my brain. It's not going to be a positive addition to Amazon's results. It's going to be a drag on their results. So you got that to look at. And their guidance wasn't hugely positive. It was pretty mixed also. So when you look at Amazon from a strict value perspective, this is being very, very conservative. Right now, it's over 3,000. It's around 3,200. Its actual value is around somewhere between 12 and 1,400, okay? Now, that strict value approach is not giving them credit for the legendary company that they are. But let's say you give them that credit to some extent. I think you end up somewhere north of 2,000, let's say 2,400. That's 1,000 points down at least. Well, 800 to 1,000 points down from where it is now. And maybe that's even being too conservative. But it's easy to see it going down 600 points, which would be a 20% drop from where it is. And this run up today isn't so amazing when you consider that it first dropped like 8% before it began today's run. So Amazon, I think people are looking for positivity to get back into the market, and they had the excuse, and so they jumped on Amazon. But also, I think the short sellers got out of it, were covering their shorts, and so that also prompted up. But as the market was going wild, and part of its going wild was the good jobs data we got. There's 467,000 jobs were added in January, which is amazing, considering that the flu probably reduced those numbers somewhat. But we're in this weird situation where good news is sort of bad news in a way. It looks pretty certain that they're going to be raising interest rates. And that's also because inflation is picking up. Now, we were saying last month inflation was running 7%. If you look at official figures today, it's looking more like it's 8.4%. And those are using the official figures. And right now, the official figures are a bunch of malarkey.
That's a bunch of malarkey.
And why is that so?
Because not a single thing he said is accurate.
As Biden would say, they truly are a bunch of malarkey. They've cut out the gas expense and also your grocery expense. if you include those, if you include the things that we really buy and have to buy every week, the inflation is more like 15%. And I'm going to be presenting a video next week uh, from an expert to explain how they changed the figures to make it so they didn't have to pay out as much in Social Security, and so that companies would not have to raise their pensions as much. So there's motivation for the government to make inflation not look as bad as it is, because they don't want to increase the payments, especially with Social Security. So uh, Facebook is sort of at an amazing place. That stock, it went nowhere. It's actually now more of a value stock. Its forward PE is like 15. Okay, and maybe Berkshire is going to be buying it pretty soon. No, I don't think that happens in this world, but it's conceivable that you could consider it a value stock. And they're investing a lot in the metaverse. And now I've lived through the .com crash. I was in there in a big way and getting out of it in a big way. And the thing that occurs to me is the metaverse really at the point where it needs to be? And the answer is clearly no. Right now, you have to wear a TV set or a computer with a monitor on your head. And I'm into it. Yeah, I bought one, you know, but I think what we really want is Star Wars. And remember in Star Wars, when the princess appeared, she was a holographic image. What we want is we want these images appearing in front of us, okay? And the more solid and real like, the better. But I think at least we could have screens appear, and I guess you can get that with augmented reality, that you would have to wear glasses for. Well, I wear glasses. I'd have no problem with that if they can integrate that into my. I know it's upsetting me too, but we got to go through this inflation data. He gets upset about these things. He can hear it in my voice, I think. But I think we want these holographic images like they had in Star Wars. And I think we might be in the same place with the metaverse where we were during the .com crash. Uh, you know, 25 years ago or 23 years ago, somewhere in there, we started to go wild about the potential of the internet, and it came true, but it took 20 years to get there. Okay, now the metaverse, we can be kinder. Maybe it'll take 10 to 15 years, but that's a long haul for Facebook. I think they will get there, and maybe it'll go faster than that. Maybe let's say 10 years, and being extremely positive, let's say 5 years. And but I don't think it's sooner than 5 years. So the potential is there, and you probably will look like a genius having bought Facebook right now, but I caution you, you're going to have to wait a while. It's not coming immediately, that's for sure. My main thing right now is Sorty, SRTY, which is a triple leveraged inverse fund. It's a bear fund, and it's an inverse fund on the Russell 2000. And it didn't do too bad today, considering how wild the market took off. The market took off very wildly, but then it dipped at the end, and I could see that Sorty was going down and down, and so I decided I have enough conviction now that if this was something I didn't have conviction in, I would have sold out of it, but I didn't. I doubled down, and I hit almost the exact bottom. I bought it at $55.56. I think it went down to like $55.45, something like that. Boy, it's rare that you get that close to the bottom. And then it ran up like a dollar and a half. And I put major money in it. So it helped a lot. And I had made a lot of money on the previous 2 days. So I'm sitting really good with Sorty, SRTY. And I wanted to have this short on in a major way for the weekend because I am worried about Russia invading Ukraine. And we hope to God that doesn't happen. Uh, but I think in any case, I think the market will go down when they raise rates on March 15th. And I think it's possible they'll raise it to a half a percent, 0.5 percent. But I think it's more likely that they'll do 0.25 at a time and just assess each month as it goes. Because I think he got burned doing it too quickly in 2018. And it had a major negative effect on the market. And I think he's remembering that lesson too well. And so he's probably going to do 0.25 at a time. But another thing that makes me think this is a bull trap and we're going to see another sell-off is that the market sold off at the end. At the end of a major day of rising, it sells off, especially before the weekend. People are getting out because they're so happy to get back some of what they lost. They're so happy to get out at recovering some of their losses that they sell and have a nice weekend, and maybe I don't think about the stock market for a while. And I think that's where a lot of people are. And if we have a black swan event, an unexpected negative outcome like Russia invading Ukraine, the market immediately goes down 5%, or at least the small stocks in Sorty, SRTY, at least those go down 5%. And these interest rate increases, I think they're going to be monthly, and I think they're going to be 0.25% for a while. So let's, I had to change my thinking. I'm a bull market trader usually. This is not my thing. I'm doing this because I see this as a major crash. Okay, I don't think we've seen the worst. I think the worst is to come, and so I'm trading. I'm pretending Sorty is Tesla. Okay, and that's exactly what I did with Tesla. When it went down, I doubled down. If it went up significantly, let's say I sold and then it went up significantly, I'd say I'm wrong and I would double down. And it ended up benefiting me that I made a mistake because then I doubled down on my conviction. So I'm doubling down. I'm hoping this works. This is not my advice. I'm not recommending this for anyone. It's dangerous. It's risky. Bear fund trading is much more risky than bull market trading. Okay, so unless you're used to this, you want to be very careful. And so I'm not recommending it. This is just what I'm doing. Thanks for listening. Next week's going to be wild. I will see you in the future.